welcome to my YouTube channel World Through Veera. Today I would like to touch upon a brief on savings versus investments. What is savings? Savings is nothing but whatever the money you earned, from that whatever you spend, after spending the leftover money is going to call a saving. Saving will always help us to overcome our immediate money needs, our future money needs, and any emergencies. Those cannot be sufficient for us for our vision to buying a car or buying a house or children higher education, or you wanted to be a financially independent, having a very good purpose for retirement. If you want to retire early or you wanted to be financially independent, you should look into the investment avenues. Investment avenues normally you can name it as equities, mutual funds, debt services, debt funds, index funds, real estate. In this, equities having a very high risk, mutual funds high to moderate risk. In case you go for a bonds or a debt funds, low risk, returns also very normal. In equities, you have a high risk because whatever the money you invest in an equities, there is a chance of losing 100% in the equities, but there is no upper cap for gaining from the equities. You may get 1x to 10x or even more than that any given point of time. If you going to do savings, it will be a fixed deposit, it is going to be a government bonds, corporate bonds. Corporate bonds having little risk, depends on the company is going to perform. If the company is not going to perform well, they may avoid paying you the principal amount also for the bonds. Friends, when it is coming to long-term strategies, as I discussed about goal-based strategy for the long-term investments, you should plan 3 different baskets. One is for buying a home, second one for children higher education as well as marriage, third one is your own retirement corpus. Your own retirement corpus, you should start investing from the day you started earning your paycheck, like PPF, NPS. Normally, PPF is going to be a income tax free for the investment, for the returns, as well as the interest earned. NPS is a tax deferred scheme, which is again in turn will be invested by fund managers into based on the scheme which you are opting for, from equities to government bonds. Then it is coming to rest of all schemes like post office savings scheme, Pradhan Mantri Awas Yojana, Sukanya Samruddhi Yojana. These are all given for various purposes, which is Sukanya Samruddhi Yojana for a girl child, higher education, or for a marriage. You will invest up to 16 years, then 21st year girl is going to get X amount, which is predefined. PPF normally gives you a 7.1% interest. PF gives as on date, government every year decides and different interest rates. In general, as of 2023, it is 8.25%. Coming to equities, equity is going to have very high risk, as we are already talked about, and very high returns also. You should always select equities when you are investing at a young age. For investment principle, general thumb rule will be 100 minus age. Suppose if you are 30 years old, you wanted to invest your part of savings into equities, you should plan 70% like that. Good night. Thanks for watching my channel.